was a bit of a mixed bag last week with economic news, but for the most part, ended up being a good week for the market and stocks, except for small caps, which we'll kind of get into. But overall, pretty good week. So in this week, we've got some pretty big probably news coming out of the Federal Open Market Committee meeting on Wednesday. Don't expect any rate movement at all necessarily, but it'll be interesting to see what Powell has to say. So let's get into it, folks. So this is your Market in Minutes report. It is looking back on last week, which is June 3rd through the 7th. This is Mike Minter, Chief Investment Officer with Financial Synergies. Apologize for being out of pocket the last couple of weeks. Wasn't able to make a video with the craziness of summer and taking my daughter to camp and just all kinds of stuff going on. We were out of town for a bit. So good to be back in the saddle. But let's talk about what actually occurred last week in the market. So again, with some mixed economic news, still ended up being a good week for stocks. So all the major indices except for small caps were up. Again, small caps have really struggled recently, especially with their extra sensitivity to anything economic, economically centered in terms of the news. So, we're still waiting for a little bit of a breakout on that, and it's gone up and down. I mean, they've had their moments, but for the most part, they've struggled. But across the board, other than that, pretty good returns here. And if we flip over to year-to-date performance, again, small cap trying to get back on track here, but they're relatively flat for the year. But the other major index is at least pretty firmly in positive territory. As you can see, tech is still kind of dominating, and that's indicative of the 14.5% return there. So can't complain about that. Rates. So it has not been a ton of movement here. These are pretty much where we were just a couple of weeks ago. So 30-year Treasury at about 4.6, 10-year at 4.46, and the 2-year at 4.88. 30-year mortgages are still hovering around this between 7 and 7.5 range. So it's been pretty range bound there. So not a whole lot going on. So last week was kind of all on the jobs report. It wasn't just that, but that's there's a lot of news centered around that and the resiliency of the economy. So weak manufacturing data prompted declines early in the week, reflecting investor concerns over the economy's strength. So again, the economy continues to show this resiliency. It's something else, that's for sure. I'm sure it has the Fed kind of scratching their heads a bit, but that's where we are. So, but stocks did rally in anticipation of the jobs report on Friday. And then the market reaction was mixed when the stronger than expected jobs report finally came in. And so the S&P touched a record high intraday before profit taking late in the session. So that was on Friday. So the catalyst that was not. So the week closed with a jobs report that underscored the economy's resilience while highlighting the data's mixed nature. This 272,000 jobs added in May. It was higher than way higher than the 190,000 economists expected. And so at the same time, wages rose 4.1%. from a year ago. So the strong jobs report and a surprise wage increase supported this narrative that the Fed is probably going to have to wait a little bit longer before considering a move, in terms of lowering interest rates. I don't think hikes are necessarily coming in or anything, but there's almost a 0% chance they're going to actually lower rates in June. That's just pretty much off the table, and we'll find that out on Wednesday. But unfortunately, this jobs growth does kind of support the storyline that the Fed's probably going to have to continue to pause here in terms of doing anything on rates. So, and although inflation now exceeds the central bank's 2% target, the jobs report suggests that economic growth remains powerful despite higher short-term rates. All right, so let's take a look at what is on deck this week. Not a whole lot going on in terms of just overall amount of data, but today I should say, we have the 3-month Treasury bill auction. Wednesday, we do have the CPI report, and this is the Fed Chair Conference. We will definitely be tuned into that. It's when the FOMC meets and makes their announcements. Powell will be speaking as well, of course. And then on Thursday, we have our jobless claims, producer price index, and we do have Fed official John Williams speaking as well. Friday, consumer sentiment, and Fed official Austin Goolsbee speaks. So quite a bit coming out from the Fed this week. We'll should get a window into what they're thinking. Companies reporting earnings, not a big week at all. Wednesday, we have Broadcom, and Thursday, Adobe and Autodesk. So not a whole lot going on there at all as we kind of wind down that earnings season. So that's it for this week, or I should say last week, folks. And of course, we will report back to you the following Monday on what happens this week. So hope we have some good things to say about the market and what comes out of the Fed. So here's all our contact information. Hit that subscribe button down below if you're not already. We'd love to have you get all our videos as they come out. And here's a little light reading disclosure for you. But other than that, we will see you next week. Thanks, guys. Appreciate it.